Brian Nagel, Oppenheimer Senior Equity Research Analyst, for more on Nike. Brian, what are your main takeaways? I mean, Sarah detailed a lot of the headwinds from, tough comparisons to obviously what's been going on in China.
Good afternoon. So, look, I agree with what a lot of what Sarah said. I think she did a nice job kind of breaking down the results. I mean, as I'm looking through the Nike results here quickly, I think it's a bit messy, right? It's a bit messy again for a lot of the reasons Sarah mentioned. The key here, as we get the conference call at 5 o'clock, will be this management team and how much of what we see here in this press release is just kind of transitional type pressures, especially on that gross margin side. The way it's written in the press release suggests to me that it's probably one time in nature. And from that standpoint, it could actually be a positive because it almost seems like Nike's probably clearing itself out of these headwinds and preparing for smoother results ahead. So I think the underlying trends here are good, but the report itself is quite messy.
Yeah, it's a tough spot. I mean, obviously, you would think that some of their products fall into the kind of goods categories that people bought enough of for a while, and now things that transitioning to services, the North American business at least. Another piece of it, Brian, the company authorizing an $18 billion share buyback over 4 years. That's reasonably good sized on a market cap of $170 billion. Is that kind of altered the story at all?
Look, it's a positive. I mean, I tend to look at buybacks like that as very much a vote of confidence from within the company. So I think it's a positive. I think it's probably also somewhat suggestive that Nike's moving past kind of the really heavy investment phase. Remember, this company over the past several years has been investing aggressively to build out its technology backbone. I think it's done that very successfully. I think this buyback announcement today is probably some signal that, again, they're always going to be investing, but probably the meat of it's done.
And then finally, just in terms of how the stock is situated, Brian, in terms of valuation, roughly 30 times forward earnings. It had a much higher premium. It was 40-ish not that long ago. So some of it's bled away, but it's obviously, not cheap, even if Nike always tends to trade at some kind of a premium.
Well, look, I view the valuation as attractive here. That's one of the key reasons we keep on recommending the stock. Clearly, this is obviously a theme throughout the market. I mean, what the market's saying right now is there's a potential recession on the horizon, and that potential recession would be bad for Nike. I mean, in very simple terms, I'm not totally sold on that idea. But I think, even if we did get some type of pullback in the consumer, I think on the other side of that, Nike is extraordinarily well positioned. So, look, what we tell our clients is, buy Nike for the intermediate to longer term, and this valuation now, having come down significantly from where it was, is an attractive point.
All right, conference call begins pretty soon, 5 o'clock Eastern. We'll see what comes out of that, Brian. Appreciate the reaction. Thank you.